Good morning, everyone. Started a little earlier here, I guess. Morning, YouTube, morning, Trade Pros. About 10 seconds earlier on today's session, but we do have a decent bit to cover, especially if we're going to be going over our overall uh, trade plan as well. I got a little stutter over there, but let's take a look at what we have going on today because today's Wednesday, the February 22nd. So we do have an FOMC space coming out. We do have to talk about some of the retail that came out yesterday, right? We had a decent bit of earnings on yesterday's session. And what else do we have? We had also Fed's Bullard talking this morning, and we have the meeting minutes that are coming up. So, a decent bit to talk about here today. And we'll start off with the retail and Walmart HD, right? We have TJX coming up as well. But we had a lot of growth names that came out yesterday after the bell. Growth names, I believe Coin reported. I'm not 100% sure, but there was there was a decent bit of growth names that yeah. So Coin reported yesterday. What else reported? I think like Unity, right? A bunch of different growth names reported, but the main topic that I do want to take a look at is going to be what had happened with the overall retail names. Now, Walmart, one of them actually gapped down and got a pretty strong rally throughout the day. HD gapped down and got beat up throughout the day, right? We have TJX that's already reported here. It's gapping down. So let's take a look at what's going on with this retail figure. So huge defining area in the current economic landscape in the markets this week, right? With earnings that are coming out from the retail heavyweights like Walmart and Home Depot, also TJX. But like most economic indicators these days, they came with a mixed bag full of solid trends and worrying stats, as well as a vague commentary about consumer resilience. So it's also making it difficult to predict shopping behaviors for the remainder of 2023, resulting in some kind of muted uncertainty outlooks. And those are going to be the forward guidance that they do talk about. And they were fairly vague, if you will. So Walmart was down about 4% here pre-market after setting cautious profit guidance for the year ahead. But shares ended the session pretty green, right? They popped pretty aggressively as investors focused on its earnings topper, strong comparable sales and dividend boost in the current macro environment. HD, on the other hand, initially slumped and the stock stayed to the downside and eventually closed the day down 7%. While earnings beat consensus estimates, sales came in short, and disappointing guidance for fiscal year 2023 was not enough to counter a bigger dividend raise and bullish analyst commentary. So, in the longer run, right, Walmart and HD, I think are going to be very, very powerful names that are going to present a decent bit of upside. But in the current macro environment, the retail sales and retail in general is pulling things down, which is not a good step for the macro. So uncertainty was also a common theme on the earnings calls. Just take a look at what had happened in the transcripts and follow-up interviews. We do see a unique environment with many cross-current right now. Cross currents. Customers are still spending money, but balance sheets are continuing to get thinner. The savings rate is roughly half of what it was pre-pandemic level, and we've been in a situation like this where the Fed is raising at a rate that it does. This is what the executives at Home Depot and Walmart did say. So that makes us cautious on the economic outlook because we simply don't know what we don't know, right? Fair enough. So RTX, the retail ETF, dropped fairly aggressively compared to the benchmark on Tuesday. So it was pretty good year to date, but overall we had a lot of downside in the overall retail space. Talking about retail space as well, sounding off against CEO Andy Jassy recent return to office mandate. Amazon employees are getting upset about taking off their pajamas. So a Slack channel protesting the measure, which will require corporate staffers to come in at least 3 days per week, amassed 16,000 members on Tuesday night, while an internal petition has so far gathered 5,000 signatures. Many are also putting remote advocacy in their status as they express frustration. So, over childcare arrangements and their work life balance, as well as prior commitment to flexible work that gave many employees the ability to find more affordable housing. So, while Amazon's RTO policy is not finding favor among the workforce, It could be a boost for local businesses and commercial real estate markets that are in quote unquote current recessions. So that has to do with the retail space. A lot of Amazon employees have been laid off as well, and those layoffs are probably going to continue in that tech space. But we also have the meeting minutes that are coming out today, which is something pretty important to talk about. The index dropped a bit overnight, dropping 2% yesterday to market's largest down day since the December FOMC meeting minutes, and erasing all of its gains for February. So all eyes are on the release of the Federal Reserve's meeting minutes today as the markets look for guidance on policy going forward. That's what Deutsche Bank said. However, it is likely to feel a bit dated as a lot has happened in the subsequent 3 weeks. Naturally, this is usually what these meeting minutes are. The meeting minutes in general, they're predetermined and pre-written scripts of things that we already know. It's very rare to see a deviation from what we already know, right? The hawkish slash dovish tone is probably going to continue as it was over the past 3 weeks. But of course, there could be some changes, and I know a lot of people are going to be watching that, meaning this could make for a pretty boring morning session in the overall market. So the slump in equities has followed a sell-off on the fixed income side, with the 10-year Treasury US 10Y returning to its 4% level amid hawkish rhetoric from the FOMC policymakers. So the Fed has also emphasized that it would be data dependent, but the question is, what data are they really looking at, which has been the case for a while now. So to add to that, we have to take a look at what's going on with the overall market. But I talked a lot about on like Twitter and like even our like Discord chat. I talked a lot about TLT, right? TLT had a strong day last Friday. Here Tuesday, we gapped down aggressively and it's pushing lower. TLT, I think there's still more downside in this name, especially if you start crossing that $99 marker where we can start to see that larger slump, right? It's something that you have to be aware of and understand. If the bond market's weaker, we're going to see weakness in tech and the overall market. But when it comes down to the S&P today and the plans, what I'm looking for realistically is going to be a muted morning session followed by some afternoon movement. Realistically, today in the S&P 500 futures, we have a very key level that sits at 4022. So the 22s to the 24 is a massive pivot. It was the bottom of a large distribution that was recently passed yesterday, or a key distribution block to the downside. We also have that area that differentiates the upside and the downside. So this is why I'm going to use it as a pivot. If we start rebidding above it aggressively, we're probably going to get the move a little higher. That could test the 30, it could test the 38 and continue higher. However, as long as this area holds out downside, I think there's more downside pressure where we could see the 08 region in the futures, right? The 08, which is fairly close to where price is currently sitting. And then I have a target down into the 96, 98 region. That's the start of another distribution block. If you break the 96, 98, I think we have a pretty stronger move into the 3990, 388s. If that breaks, what happens is price opens up a distribution block where we could see the 3950, 3960 area fairly quickly. And it could happen on the day depending on what the bearishness of this market is. I think there was a lot of selling yesterday, and I think there's priced in more bearishness, so I'm going to lean a little more to that side as long as we stay under the 22, 23 region, 24 region on the S&P 500 futures. So with that being said, I want to wrap it up here for the day. Remember, check us out at TRADEPROacademy.com, and you can jump into our Discord at community.tradeproacademy.com, and we'll see you guys there. So thank you so much, and chat soon.